Right, let's get this on the go. Okay, that's good. Let's see about setting up a recording function on that. Set it over there. Right, we're just setting up. Just setting up. Get that on there. Also live. Right, let's forward that over to there. Why is that not showing? Did I not just share it? Yes, I did. So why is it not showing? Ah, goodness me. Right, okay, so I need to close this down or something? My Telegram. Quit. Reboot. Right, so that's working. Everything's working, is it? Working, good. Let's get this, see if that's going to work. Why is that not showing then? That should show up there. So again, bit. Right, okay, so it's showing there, just didn't. Let's get some that going on. Let's move that to there. And then, right, that's better. Perfect. Just in case, that's launching there. Let's get rid of that out of the way. Let's see what's going on. Still bullish spice is on gold. We had a lovely little pullback just now, so we're still holding that. That was good for anybody who wanted to get in. Hello, mate. What do I call you? IB? EB? IB, first one, or EB, second one? Or none of the above, third one? You're live, you're in YouTube, you're in Zoom. Right, good. Alright, let's get that on. And I'll tell you what, let's get rid of that. Let's check participants. I want to share something simple with you guys today as well. To know your worth, I'm going to make a video on it as well. To know your trading worth or net worth when it comes to trading. I'll explain it. Quite simple, really. Good to see. Right, someone logs in and then they log out. What's the point? Yeah, okay. Yeah, second one. EB. Yeah, I like the second one. Just sounds cooler. Where are you? Whereabouts in the world are you? Right. Anyway, let's get going. Let's get sorted. So, yeah, I want to share this with you very, very quickly before we do anything else. Now, I got this idea from others that are out there trading. I just thought it's a proper, good, decent way to gauge, what you're doing, how well you're doing, etc., etc., etc. So let's just have a little look. Zoom in a little bit, and it's something like that. So, what are we talking about? So, progress tracker. So, because there are a lot of people doing things like taking these prop firm challenges, I figured it would be Toronto. Oh, you're in Toronto. Good morning in Toronto. I bet it's cold. But yeah, so like there are these challenges where you do the prop firm challenges. I might actually show a 100k account maybe as we go into next month. I was thinking about it just to reinforce, and then maybe we could, I don't know, link it up to things so we can keep better stats and do something like that. It just means more work, more aggro, more hassle. We try things. We can just drop it out if it's not working or don't like it. But yeah, just considering some options. But yeah, talking to one of my colleagues. Yeah, just to keep trying to keep showing a truer picture representation. So I'm going to make a YouTube video. I haven't finished it yet. I put up the indicator one today. I'll do this one, but this just give you some idea about your worth. What are you worth? So I think this is relevant for when you are actually trading a pot of money. Say you're a funded trader, and assume that you were funded as of January this year. So you start with 100k, for example. So there's all example. Now say at the end of the month you generate, you make ending balance 110. So 110k. So net profit's 10k after you split, because you're going to give some to the firm. They take some of their profit, 30%. You're left with 7k. Assume that you traded for 10 days, and so it's 2 hours a day on average, or maybe it was like 3 hours one day, 2 hours on the next day, 1 hour that day, or for argument's sake, total hours spent over those 10 days that you traded was about 20 hours in total. Now, whether or not you want to include, in terms of variables and how detailed you want to go, whether you want to include the fact that you're out going for a walk and you check in on your phone, I wouldn't include that. Or if you was at the gym, or if you went for a coffee, or you went shopping, or just having lunch, I wouldn't include those hours because it's not technically in front of the chart. But what I would say is, like, the time that you spend, say you're analysing the markets, you're scanning the markets, so maybe note down the time that you spend, because what it is about, it's about not wanting to overtrade. And so by having something like this, perhaps this may help you to appreciate that, to sort of recognise when you're doing too much. Maybe just another tool to help gauge your worth. So at the end of the day, you're trying to compare yourself to maybe a 9-to-5 job, or at the end of the day, you've just maybe had a job where you were working all the hours that they gave you, and it was just knackering, and not to also you had to include then maybe petrol costs or commuting costs, the time it took to go to work and to come home from work, maybe the money that you spent for your lunch and everything else. You package all that up and you look at how much you've actually spent and the time, and what are you really worth per hour. And you might have been on a very good salary, but then by the time you divvy it all up, what does it work out per hour after everything? Because you have to be realistic, and that's being realistic. Throw it all into the mix. So to give you some idea, and to obviously keep going with the theme of running trading as a business, I think it's important that you identify if you're over trading, or how much you're giving to the business in terms of how much you're spending on your trading. Not to say that you're supposed to cut down. If like yesterday was a very busy day, there was a lot going on. It was really good to actually sit, watch, and get involved in some bits and pieces that was moving, and maybe try and take a little bit of the money from the market. So overall probably spent about a good 6 hours or so yesterday looking at the markets. So this is just an example, but just to give you some idea, say you've made your 10k at the end of the month, you've split net profit after you split 7k, divvy that up by the amount of hours that you spent, because you want to work out how much you're worth per hour, and it worked out £350 per hour. So $350. I've done it in dollars, but you could do it in any currency you want. It's nice to get a net worth, and at the end of the month, like I say, I haven't finished it, so it's just to give you an overview. But at the end of the month, and You could do some more little columns at the end of the year, nice to tally up. But really, just to see what your worth is each month in respect to your trading and trading as a business. And any business. There's a colleague of mine. He keeps talking to me about stats, and he likes to look at stats. And I was thinking about this the other day, and I think it's very true and relevant, and that's what you want to do, really. Now you can link up to these other, I don't know, MyFX accounts, I guess, or you could just go into your own accounts and look at the metrics or whatever they're providing and do some sums. But what I'm basically saying is you should do that. You should do it every day, at the end of every day, every week at least, tally up, see where you're at. How are you doing? Because something that one of the guys, my friend, he's a mate of mine, he's a trader. He said today, he goes, yeah, I thought I was actually like performing better in terms of making more profit. But he said because I don't focus on the money, which is good. I don't focus on the profit. I focus on the process. And I thought, yeah, that's good. So, it's all relevant and it's all relative. So something like this might help you to track your progress. And talking stats at a glance, you can see what you're doing, and then you can sort of put that into. I mean, you can go all out with analysing this until the cows come home. You can put it into a chart, and you can, track your progress month on month, and do fancy pie charts, whatever you want. But I think just simple tables alongside maybe your journal or as a bolt onto your journal, just to give you some idea how you're doing each month, and what are you worth, and so then you can say actually I had quite a busy month, or really we're in lockdown, so I'm not really doing much, so I'm actually sitting here doing a lot of boredom trading, and that's not right and that's not healthy. So I encourage myself to get out the house. So then it ties in beautifully with having that daily routine and your daily trading routine. Know when you want to sit and trade. So maybe trade around the London Open, come back later and trade around the US Open. But if you've made your money during the London Open, don't come back. Keep an eye on it on your phone at best, because obviously you want to see what's going on. But so yeah, I just thought that might be a handy little thing to do. I was going to make a little video on it, maybe 10 minutes worth, just breaking it down. I'll fill in the columns a bit more, add a few other little bits and pieces, but just to give you an overview. I just think stuff like that's useful and handy, because it's about the process, which is what we keep saying. So as part of the process, you're running this as a business. If you don't have access to any stats and you just try and keep it all in your head, and it's all that. I think that's not the way to do it. I think that's lacking a little bit of discipline. I think you need to be more on point with what you're doing daily, weekly, monthly. Something else he said, actually, institutional traders, they look at they look at monthly, quarterly, yearly figures, and always looking at a bigger picture, seeing what they're doing. Obviously, it's relevant to them now because come January they're going to be paid out for last year. Do I trade news, like high impact news? Not really. No, I went for a phase years and years ago when the volume was really, really good, and we'd always get some good moves to trade NFP. I remember doing one whole year where I kept. Again, I did a table like that and just kept results, and I was travelling and I was moving about a lot, and at that time I was working abroad. So for me, for my own personal consumption, personal part of work-life balance, when it came to trading, I wouldn't really trade during the day. Each day I'd only look at high impact news events. One of them was the non-farm payroll. So on the first Friday of every month, non-farm payroll, I would be there no matter what time it was, wherever I was in the world, time zone, and I would trade that event, spend a few hours trading it, and that would probably be one of my few times that I was trading in the entire month. And so I'd look to go in quite considerably, quite considerable lot sizes, quite hard, and I had a simple strategy. It was just, I still use it now, not as much, but I think I did it the couple of weeks last week. I did it, or the week before, with the non-farm first time, because I thought January, let's see if we can incorporate that again. It was just shorting the euro dollar. A few minutes after the event, non-farm payroll, I'd look at what the euro dollar was doing, and if we made a high, pushed up, I'd look to short it, and often we'd get a decent retracement, a decent move to the downside. And when I kept tabs on it the entire year, 10 out of 12 times it went short and it did what I wanted it to do. maybe went long after the event, later in the day or later in the afternoon. But generally, 10 out of the 12 times it went short. Only twice did it actually just rally after the event and just stay strong and just keep rallying. And so yeah, twice out of the entire year. But generally speaking, we always get a bit of a nudge up maybe, and then we just short it back down again. And you should at least be able to get 20 or so pips. But I don't look at it so much now because things have changed. It used to move. It used to be able to get 40, 50, 60 pips out of it, no drama. So even if you just took like 30, 40 pips out of that move, it was a nice trade. Now it's a real struggle to get anything out of it. So something I noted yesterday, I was talking with Chris, and we were trading, and he was taking a long position on the euro dollar at around just below 121, and I said to him, but in all fairness, it's not finished the move to the downside, and it's bearish, and you could see that when you were looking at it on the daily time frame. It was bearish, and we had an overextended move showing our stochastics. Our overbought, oversold was up here, suggesting that it might pull back, and it looked a bit bearish, and obviously red candles. So clearly in a downtrend, it needed to go and do its thing to the downside first. So when we looked at it on the 4 hour and the 1 hour, you could see this move down. So I said, it's sitting at the 61.8. Let us, just wait a second or two or three. Allow it to finish the move to the downside. That's what I wanted to talk to you guys about today, because I see a lot of traders are, they keep trying to catch the tops and the bottoms of a move. It moves a bit, and you think straight away, I'm going to get in now and bite back up, and obviously, you can do that. You want to get the best possible price, don't you? You want to get the best entry, sniper entry. I can appreciate that. So you need a strategy that's going to allow you to do that. You need to have some confluences. You can't just jump in. Everyone just keeps jumping in. It shows that you're lacking in knowledge, experience, and you have a long journey ahead of you, potentially, because it's the way you're trading sucks, quite frankly, and it's impatient, and it's not disciplined, and you have no rules. You're just taking a punt, think that'll do, I think I'll buy it here. And it's like, well, what confluences have you got? And so we have a strategy for that, That's the 764 strategy. And you have to consider the instrument that you're trading as well. What do I mean by that? Well, this is why we go back to saying trade, pick one or two pairs and focus on them so you understand how they move. So euro dollar, how much does it move in a day? Does anyone know what the average true range is? Aussie dollar, pound dollar, do you know roughly how much it would move in a day? So if it's trending to the downside like it was yesterday, obviously coming off this big trending move, pull back, just missed the 38.2, and then it started dropping. Do you know what it's likely to do? Because just buying it here because it's stalled, it's done the first session, London session, Asian into London. Don't just assume that Americans going to come in and buy it back up. Don't assume that. That's wrong to assume that. There's no statistics that you have that says that London session takes it down, so US will reverse it and take it up. And that happens 90% of the time. That doesn't, there isn't those statistics, or I don't have those statistics. Again, as part of your back testing, as part of your analysis, as part of the work that you need to do over the next few months and few years, that could be something that you should consider and, incorporate within your trading. How many times do you see a reversal at a key time? Because really, we're only looking to trade at key hours, key times in the day. So if that's the case, then you want to make sure you've got that session nailed, that you know what happens during that session. You know what to expect, or at least have some idea. You don't want to be trading at 10 o'clock at night London time, because between 10 and 11 is the end of the session, end of the day, and everything resets and the spreads widen. It annoys me when a trader messages me and says, why are the spreads so wide? I'm like, well, what are you doing at 10 o'clock at night even trading? And it's like, well, I'm in Australia or I'm in America. And I'm like, yeah, but what, is this the only time you've got to trade? And so consider when you're trading, and not knowing that the spread's widened just shows that you don't have that knowledge. So there's pockets of knowledge that you need to have, little bits, because if you have gaps in your trading knowledge, it will show and you will lose money. And obviously these are costly lessons. So hopefully what we're trying to do is reduce those costly lessons so that even if you are learning, you're learning at a far cheaper rate. I'm very cheap. I mean, I'm dirt cheap to help. How are we possibly even running out of time? Really? 40 minutes? I have not done 40 minutes. I've not done 30 minutes. I only just started. Oh, you guys logged in, that's why. Oh, I see. That makes sense. All right. Because I was late. Yeah. I thought by being late it would be, start later, but never mind. That's fine. That's what I wanted to say. So a couple of things I wanted to share with you. Obviously, go over that 764 strategy. So allow price to do what it needed to do. Let's drill down to a 15-minute and look at this price action from yesterday and talk through it, because it's happened again today with the Aussie dollar. This is an Elliott wave move that we're seeing at the moment potentially. So we've got the wave 1, the wave 2 pullback, and the wave 3 off it goes. And potentially we could be looking at 122 to the upside if that's going to play out. But first target, your T1 should be 121.66, which is nearly there. 121.66 euro dollar upside, and then if it can keep going, 122, 50%. And that's how we do it. It's just simple stuff. So it's bullish when it's bullish. It's bearish when it's bearish. If you can't just get those basic fundamentals right, then you don't need to be putting any money down, because people say, oh, I'm only dipping my toe in the water. I'm like, okay, yeah, you won't have any toes left by the time you finish, get round to making any money, so be mindful of that. Be mindful what you're doing. Stop making excuses sometimes just to justify what you're doing. If someone says you suck and what you need to do is this, this, and this, and then you come back and say, yeah, but that's just you because you're a grown-up, right? And it's very difficult to tell a grown-up what to do because you've been independent as a grown-up for however many years, because that's it. You could be 25 years old, and I mean, officially, legal age of being an adult is 18, so you've had 7 years of being an adult. So then someone trying to tell you what to do is very difficult. So I don't mean to sound condescending or patronising. I've got your best interests at heart as best, when it comes to things, just trying to give you some information that may steer you in the right direction. We'll have a look at the AU in a minute. I just wanted to show you this price action because it's the same thing. It was just the other way around. So 15-minute time frame on EU yesterday, and you could see that the reason that we had people talking about in the various groups as well, talking about taking a long here on the euro dollar, was because of this price action. We'd come down to test previous structure. You can see some price action here consolidating, and it's rejected and continued up, so it was bullish. And you know that we've got 61.8 at around 120.94. So you can see that it's gone up, but the concern here was that it didn't quite test the fib. So the fib for me is the first and foremost. I'm more interested in the fib to provide my support and resistance. Then your supply and demand zones can feature as an added confluence for sure, but I don't put them above this. So when you guys are talking about supply and demand zones, when you guys are talking about order blocks, it's a block. You're boxing off a certain area, so it's subject to depending on the size of the box and the time frame, you could be looking at a 10 pip box, you could be looking at a 20 or 30 or 40 pip box. And so saying, oh yeah, it's going to bounce off that area somewhere around there, so okay, that's cool. But then the fibs just give me a more precise understanding of exactly where to the pip. Right, have we got some news out? Let's have a look at the news. News out 1:30, right? So is that just had a little spike down on the US markets? Will that affect the gold? Which we might see some movement on gold. Would be nice to see something on gold. You know, if gold drops, then I'll look to buy it back up. But yeah, hopefully you'll get this. So we just want to look at this price action. What it did here, it did this whole N shape, but still it tested previous structure. It still didn't tell us that we were ready to buy it here. It didn't give us the buy. And I said to him, you know, you're better off just, you know, using a 764 strategy to sell down to, short it. If it breaks here, you want to short it to 78. So, you know, selling around here could have given you 20, 30 pips on that move to finish this move off. And when it hit 78, I said, there you go, that's done. Now, if you want to look to buy it, you can buy it. So the 764 strategy helps you in both directions. So you can short to it in this case. So you can trade to the 764, and then you can trade off the 764. So that's why I like that 764 strategy, because it's flexible. All it's doing is helping you identify price action. When you have this kind of a wash and rinse kind of aggressive move, it's a wash and rinse slam dunk. It took out all the stops, all these traders thinking that they're going to buy at support, and I was like, that was just the deadest thing I could see. I thought, I know what's going to happen. It's going to do that. And that's why I have a 764. At least I know that 764 is the major fib. Out of all of these fibs, I consider this the most important, in case you hadn't realised, hence the red line. Hello, high importance. This is the one. That's okay, 38, 50 is okay, 618. But if we've stretched all the way down here, then yeah, that to me is more important. So yeah, we are now pulling back 764, and this is an Elliott wave move. So we have wave 1, which gives you you know, the pullback. Then we've got the wave 2, the correction. The correction there is Elliott wave 2. So wave 3, we're looking at wave 3 being a decent extension to the 161 extension. So what do I mean by that? Well, I've done an Elliott wave video, and it's in my playlist. It will be something like this. So these fibs, you know, people get confused. They think that you just plot your fibs one time and that's it. It's like, no, these fibs have done their job. They've highlighted the pullback. They've done their job. We can get rid of them now. We'll get rid of them. And we're looking at price testing that high, hitting where we said the 38.2 when you saw the bigger move. Now, if it on that hour chart, now if we're looking for this Elliott wave to set up and play out, we want to look for some extension levels. So we're looking for that 161 in this case. So let's have a look at that. So what we do is we take that last swing high, we take that last swing low, and I've got a fib. I've got my pre-configured fibs for this area already. So yes, already. So there we go. So that's that. Now we're going to scrunch this up and look for the 161. Where is it? Let's look for the 161. Why is it not doing this? I hate it when it does this. It just sticks. Come on, get down. Oh, maybe just do it here. Here we go. Let's do that. There we go. 161 is at around what I just said, 122. So that ties in with the 50% fib to the upside, 122, and you know, that's a potential upside target for another 50 or so pips. Quite nice. So that's what we'd be looking for. So the reason I showed you that is because it ties in with the Aussie dollar as well. We're looking at a dollar index. Dollar index is bearish, so Aussie dollar's bullish. Let's have a look at the Aussie dollar as well. We're still sitting at that 7770 area, which we've been looking at all day. It hasn't really done much there. Understand again, average true range. What does Aussie do? What does the Aussie dollar do in any given day? Do you know? If you don't know that, why are you trading it? You know, not to say you can't trade it, but I'd want to know. And then you sort of gauge, where's the high, where's the low, how much has it moved already, what's it likely to do? You know, is there any more left in the tank for this to move? And I did an indicator video just now, and I used the Aussie dollar as my chart of choice, just because I had it on there and it had all the ingredients, all the things that I was looking for, and I thought, okay, cool. So yeah, what's the Aussie dollar doing? It's not really doing anything at the moment. It's just holding. So there's no trade for me here. If there's some dollar strength, then you want to use your confluences. So you want to use everything that you're... Yeah, I said that, about 70 pips on Aussie dollar. as an average true range. So I said, I mean that might have changed. I haven't checked it recently. You've got to keep yourself up to date with all these things. But again, as a trader, this comes back to just picking a handful of pairs to focus on. By doing that, then you'll know exactly what it's doing. Well, I'm going to log out of here. Where do we choose 100%? I've just showed you the last swing high and the last swing low. So watch this video back and have a look what I just did with the Aussie dollar, with the euro dollar. I'm out of time here because I started late, but you guys logged in. Maybe I could just log out of the Zoom. I'm still live on YouTube, but I'm just going to log out of this Zoom call and log back in. I'm trying to keep these sessions to about 40 minutes anyway, but I just want to go over the Aussie dollar. So what, we'll do another 10 minutes or so. And any questions? Any questions from YouTubers? Any questions? Any more questions? Roll up, roll up. Yeah. Any questions? Thanks for coming back, guys. Thank you for coming back. I know it's a bit of a pain. I didn't want to do any more than that. I figured that I worked out roughly that I covered the few things that I wanted to cover in today's session to keep it nice and light and simple. I'm gonna switch over to gold and focus on that because I'm interested in further upsides. You know that from yesterday's call. So I've been trading it yesterday, but then I thought, well, it's broken key levels of resistance, so I'm interested in taking it up to 1880 and 1900. And also I took a divergence strategy, really simple stuff, on the pound dollar, and I'll show you that one. That was nice. We had divergence on the 4 hour, we had divergence on the 1 hour. So I had divergence on the 4 hour, divergence on the 1 hour. This is a kind of trade that I like to take, divergence on the 1 hour on the pound yen usually. I think I wasn't really looking at pound yen. It might have set it up on the pound yen as well, but I didn't really look. But we'll have a look. But yeah, same thing. Someone asked me about the 764. Where'd you take your swing? How'd you work out your 764? Well, it's just the highs and the lows. So whichever area on that chart you're interested in trading, use maybe the 1 hour chart or the 15-minute chart to plot some fibs on that area. A 30-minute chart. Personally, I like to use a 1 hour and higher, 4 hour daily. When you say trade with the trend, is it okay to trade counter trend? 200 EMA if all your signals are there. Well, yeah, that's what the divergence is. When you see divergence, divergence is another word for exhaustion. So you know that the markets move in stages, don't they? In waves. So that Elliott wave's a pretty good one. So we go up, we hit a certain area of resistance, then we drop off, then we go up again. So if you are nice and disciplined as a trader, you'll be like, okay, this is bullish, I'm going to ride this up. Okay, once it's gone up, thinking, okay, I know that it's bullish, so I'm going to be mindful. But I think triple top, we want to short it back down maybe. So we'll do a counter trend. But because I know it's a counter trend, I have no expectations that we're just going to get a massive sell-off and be naive and think, oh yeah, we're getting in on the top and it's just going to go all the way back down in one move. So this is again where the fibs come into play. And you can see, before I plot my fibs, I can tell you that's probably around a 38.2 pullback retracement. This is called the Fibonacci retracement. So the clues in the title of this tool. So what we do is we take that last swing low and we just pull that up to there, to the last swing high. And that's how we identify the range. I think somebody asked me that just now. So there's your range, and then we know that we're coming down here. We know that the pound light's the 50 number. So I was expecting it to maybe pull back to 136.19. But let me also say, because it's a counter trend move, I reserve the right to sort of just expect it to pull back perfectly to 50%, even though I know it likes that 50 number. And why do I say that? Well, because I know that it's testing 137, and I know it's testing it and retesting it, and I know that, you know, these tests are getting more, you know, they're getting more confident. The bulls are getting more confident in their attempt to break 137. They get more confident to break it to get up to 140. And I've been saying this for the last few weeks, looking for 140. So with that in mind, and you knowing the fundamentals and looking at the bigger picture, the fuller picture all the time, not just trading off a 5-minute chart, which is just a joke. People putting, you know, someone said, quoted, I've got hard resistance here, and I'm looking at these charts. I looked at the time frame. As soon as I read that statement, I looked at the time frame to see, oh yeah, hard resistance, is that a daily chart? I consider it hard resistance or hard support or whatever, because it's daily. And I looked at it, it was like, oh, 5-minute chart. I'm like, yeah, that's about as hard as a piece of paper. You know, I mean, I'm trading with fighter jets. He's trading with paper planes. I mean, it's just, we're worlds apart. So I'm trying to bring you up to my level, and yeah, it's just quite funny. But anyway, there you go. So bear in mind, what's up, Luca? Bear in mind that this was a counter trend move for sure. But so be mindful of the kind of a pullback. I've got my EMAs. I've got a 200 there. I've got 50. This is a 1 hour time frame. I won't go any lower than that really to look at what's going on an intraday. Hour by hour is okay. You know, so that's cool. Did you put your hand up? Oh yeah. So thank you so much. It's called Awesome Oscillator on TradingView. Yes, that's right. I've done a video on indicators. I've done a video on all my indicators. I've sent it to the groups. I've put it in all the groups. It's all out there now. It's in my YouTube, on my playlist in my YouTube channel. All the information's there. Just look it up, have a look. Yeah, so I'm not going to go into indicators in detail because I've just done a 20-minute video on it and broke it all down for you as well. So it's all there. Now, so the higher the time frame, the more important the levels, right? Oh yeah, of course. You can't look to make 100 pips off a 5-minute chart. If you do, great. But is that, you know, if you're trading like the Dow Jones, US stock markets, or if you're trading gold, yeah, I reckon you could probably do that and make your money, 100 pips or so off a 5-minute chart. No drama at all. But be aware what you're trading. If you're trading the Aussie dollar and you think you're going to make 100 pips using a 5-minute chart, I mean, why make hard work for yourself like that? Why even say, oh, this is a hard area, you know, it's really showing some real good resistance and support. I'm like, what time frame are you on? I'm on a 1 minute. I'm like, oh, okay, drop me out of that conversation. Those smaller time frames are for reference only, help you maybe find an entry, but you can't do a strategy, rely on you know, strategies and whatnot by using those. Use them by all means. Just don't rely on them and say, yeah, this is definitely gospel and this is how to do it. And hopefully that makes a lot of sense to you. If not, then send me a message. Okay, so where are we at now? Yeah, so let's move on from this. This was a divergent strategy I took today. Quite simply, put the stop just above when it finished its move. It hit it, bounced off it like a brick wall. Rejection off the divergence. I had divergence on a 1 hour and on a 4 hour. Divergent strategy in play, nice and simple. Trading made simple. That's what I coined it. It was just no drama. You know, it just dropped back pretty much in the second hour. So it was perfect. So now it's done that. It's held in, so we're still bullish. You could look at previous structure, this current price action. You know, it's holding. So I'd say above 137 now, floating above 137. Let's see if we can get up to 137. 137. I don't know. Next leg up, 137.80, and higher for pound. So I do have some targets to the upside. 140 though is the target. Let's move swiftly on. If the dollar pairs, you know, if they all move bullish, you want to see euro dollar long, you want to see pound dollar long, you want to see Aussie dollar long. So use them as confluence. Okay, so that should make some sense. Which one did I say? Oh, gold. Let's have a look at gold. Gold. Quick one. Finish on gold, and then we'll finish. Keep it nice and simple today. Disappointed we're only getting like, oh, mind you, I've got quite a few today on YouTube, but still, you know, there's like hundreds and hundreds and hundreds and hundreds of traders in various groups. They're aware of these live sessions, and it's that's the way. You know, when we talk about statistics and we talk about, you know, maybe 1% of traders make money and the 99% lose. It shows you in terms of their work ethic. So you're here, you're considered the 1% at the moment because you're committed. You want to make some money from trading, so you're interested in what's going on, and you know, any sources of information that are freely available, you're getting involved in. So this is one of these freely available sessions that we do, and hopefully you can learn some stuff from somebody who's been doing this since 2000 and early 2000s. Been doing it too long. So no question is silly. So sorry if this question has been asked a lot, but I've heard you plan on leaving the trading world soon. What does that mean? Oh, so I've been doing it a very long time, and then I thought, okay, one of my things on my bucket list, one of my things to do was to maybe try and do a year or do a certain amount of time sharing is caring. Doing this is all time consuming. This is stuff that I don't need to do. I could just sit and work for myself, do a little bit here and there, make a bit of money, job done, you know, go and sit my ass on the beach. Do like those Insta scammers are doing. They're always out in their fast cars, sunning it up somewhere with their overpriced trainers and torn jeans, sipping on tequilas. I said, all right, let's do this. And you know, some of the guys, some of the traders, they said, you're mad, wasting your time with these minions. They said, that was a quote, minions. So I don't class you as minions. I think if you're here and you're putting in the work and you want to make this happen, then good for you. So I'll help you. You know, one-to-one coaching sessions. I was doing some of that and consulting, but I mean, I could make a lot of money just from doing that, or even just from a retail point of view. You know, it's on my website actually. If you look at the one-to-one coaching, I was looking at like £1,000 or something for a 12-week one-on-one, which is not much. It works out about 40 quid. I think, I don't know, 40 quid or 80 quid a week or something like that. Which I thought it's not too bad for a bit of one-to-one time to help you trade profitably. But I just appreciate that not everyone's prepared to stomach that sort of money, pay it out. Also, that money's better used to just putting into your trading account when you decide that you're going to go and be funded. But of course, I don't want you just to put your money in these accounts and then just lose it. You'll lose £1,000 in a heartbeat. I don't want you to do that. So I want to, want to see if we can help. So I thought we'd do it. We can't do it all the time. We can't do it forever and ever. It's exhausting. This is exhausting. This is harder than anything I've done in ages. And I'm trying to stick to my daily routine. Get up early, 5 o'clock-ish, 5:30. Go to bed early. But some nights, a lot of nights, I'm still awake at 11, 12, speaking with traders. It's like when people decide to start messaging me at 9 o'clock at night. They're not paying attention to my daily routine. Not really paying attention to anything that we're doing, and they're asking the most basic fundamental questions, which again, it's to be expected. So that's the kind of lame stuff that we have to kind of put up with, and we'll do it. Again, no disrespect, but I mean, if someone's asking you, like someone said, oh, divergent strategy, and I'm like, well, I've done a video, watch it. They haven't watched it. They show me a chart, and they haven't even got the divergence indicator at the bottom. Or someone else has got one and they have got the wrong fib levels. They've just got some random numbers. I've seen some horrendous levels. I'm like, well, they're not the levels I'm talking about. Why have you got them on your chart? And the information's there, and we go over the same stuff all the time. So I just think, wow, But there you go. Your AU trade, the divergence had disappeared, hadn't it? Don't know. Well, if Alex says the market I'd be happy to be a minion. One-on-one coaching is worth way more. Yeah, I exactly. It's just, but it's neither here nor there. What I want to do is just do what I've got to do for a little while, and then you'll see me drop out, all being well, and be somewhere warm and sunny. So we're having a nice little pullback on this gold. Perfect. Let's see what sort of drop we get. I think to maybe buy. Look, we've got some support here. EMA support on the 1 hour, EMA support on the 4 hour, fib and EMA support on the lower time frames as well. About 58, 59. Maybe scale into a position very, very small. I want to swing trade gold. Gold is not one of those that you just put on and hope for the best. Let's stick one on 60. Let's stick one on here, but very, very small, tiny position. Let's have a look. Oh. So as we come down to test some support. Okay, just buying gold, but know please that I'm going to be risking very, very small, and I'm also going to be looking at swing trading this. So my stop loss is at 1832. I just got, oh look at that, instant profit, boosh bash. Actually, you know what, I'll take some off because it's just given me 5 there. Just so nice little bounce up. There you go, done. So you see the way it hit the support. That's called free money. That's a free money trade. It hits EMAs. It hits these certain levels, and then bosh, you get these. You get a bounce. Will it go all the way up? I don't know. But will I take profit? Yeah, I've got to take some off, and because it's just daft not to. Hold to infinity and beyond. I'm good, thanks. I just keep chipping away, making like 20, 30 pips, just doing that. I mean that was all right. That was good. So yeah, that's it. That's trading done. Bit of that. That's it. So I think I just made about 25 pips on an added trade. Very small positions. That's why I say 25 pips. We'll add it up at the end of the day. We'll see. Right, if we make 1%, 0.5%, that's good. If you can do 0.5% a day. I saw something really, really good in one of these groups at Discord. Somebody was trading, him and his mate there apparently trading, and they have been risking 0.25%, and they've bagged on one of these challenges. They've got 50k and they've bagged almost 2k, on a 50k challenge, and I thought that's really nice, really good trading. How much is their risk? They say they are risking 0.25% and showing that what you can achieve when you risk small, because for them it's quite nice, it's relaxing. When you're risking a little bit, you don't feel like you're over leveraging. You feel more inclined to take the trade without thinking about it. Think, okay, I'm gonna get in here, see how it pans out. Am I bothered if I lose, or if I'm going to draw down? No. What's the worst that can happen? I'd have to lose like 100 times to blow my account. That's the sort of thinking you need to be doing. If you're putting in all your money on this one trade, of course you're going to be nervous. How many of you do that? What, 90% of you? How many of you watch price action and think, oh, I'm going to buy here, and then just go in random punt without really planning that trade, without really saying, I am religiously, strictly military kind of precision, risking 0.5% or whatever it is? I've seen so much garbage. That's the element you need to focus on. We talk about the 80-20 split, 80% self-development. Get all that right. Come and do yourself a favour. You're doing yourself a great favour by working on yourself, understanding your strengths, weaknesses, what you're doing. Just trying to stop doing it is different to stop doing it. That's why you need strategies and rules, and then you follow those rules and you unlearn stuff and you learn new stuff. And so I said, I'm going to focus now on just my strategies, so you can ask me questions, but I'll answer them as and when, maybe, if they're not relevant. But yeah, go. Do you have any questions? Anyone have any questions? Yeah, good. How's everyone doing? How was yesterday? Were you guys trading yesterday? Did you all get smashed up with these big swinging moves? Were you going short and then it was long? And then did you go long and then it was short? Were you panicking? Were you just over trading? Were you a mess? Call 1-800, I'm a mess. Or 1-800, I fucked up. Or 1-800, I keep fucking. Yeah, how did you get on? Do you know? Let me tell you a good little piece of. Here's a tip. Here's a piece of advice. Okay, really good key piece of advice. When markets are volatile, like they are yesterday, that's when when you do your market profiling or order flow or whatever, you're looking at the volume. That's when it's not going to be accurate, and that's when you're likely to lose money when there's volatility. What you want is when the markets are quiet, so not necessarily range bound, but when they're quiet, it means that they're either they're trending. So when they're trending, that's actually when volume is low, because they're being allowed to trend. So it's not the other way round. Maybe I shouldn't call my momentum indicator strategy momentum, but the idea is understanding, or what you need to understand simply is the other way around, that when volume is low, that's when you get a trending move. So say like with the pound going up like it has been since yesterday, I was so tempted to buy this, but it meant again having to trade through the Asian session, and I just got fed up because all week it's been like Asian session, we've seen moves, I come in and it's already like moved, and I'm like, oh, bollocks, I'm not doing that today. It was sitting there last night, I put some alerts on, and I was thinking I want to take this long. I want to take it back up to at least a 76, which might be around 137, which or wherever it was that I was looking at. Oh yeah, let's have a look. Actually, I've got it on a 1 hour, and I just didn't do it because of the time. I just couldn't be bothered. Yeah, see, I don't trade off the 15-minute chart. So if you're doing analysis on a 15-minute chart, good luck with that. I've got 3 strategies that I'm teaching. I said anyone who wants to work alongside me and learn, mentor to mentee, if that's a word, properly, that's what I'm sharing my 3 strategies. I'm trading off a 1 hour, 4 hour, daily, weekly, monthly. So you guys are welcome to follow or not. Do what you want, But people chucking charts at me, not even chucking charts at me, sharing stuff, saying, "Oh, I'm long here, or short here," and obviously they're in drawdown, they've messed up, and they say, "What should I do?" I'm like, "Well, what's your entry? What's your risk?" And I'm like, "Oh, I haven't got a stop loss." I've bet half the house on it. My half. The wife's got the other half. She's divorcing me. I was like, okay, she's smart then. She doesn't want to be married to a dumbass like you, does she? So it's like that. And so just, look yourself in the mirror sometimes. Give yourself a good talking to. You have to govern yourself in this business because nobody else will do it for you. So yeah, I just chose not to go long here. It was already setting up for that retracement. I was just thought, I can't be bothered, and I left it. And I thought, if I can wake up at 5:30, that's early enough. I woke up at 5:15. If I then have a look and it's, and it's not moved a great deal, I might get in on it and decide to take it up in the morning, and do that. Yeah, that's good. Good high time frame analysis. That's what you want to look at. Look for entries on the lower. Good for you. But then if you say you're only going to take 10 pips off that move, then it doesn't matter what analysis you're doing, really. You understand whether it's a day trade, swing trade, or scalp. So yeah, what was I showing you here? I was just showing this move up again. I was looking, that would have been my target, 764, because 137. So 136.96, 76.4. Nice trade, really. We had some divergence, but then the volume came in. So, but still, divergence was created around that 764. So I thought, okay, that's cool. But then when London opened, they just, they pumped it up, took it there. So I shorted it off that move because the initial move, London's open, we'll put it back, and I took it back. Nice divergence. So I didn't make my money there, but I took a no-brainer divergence strategy. Painless. I didn't even look at it. Didn't even have to watch it. I was just doing whatever I was doing, and then, just it pinged and said, I put some alerts on. It's like, You know, you hear the phone, and I look at the phone and say, right, you know, it's like lottery. What have I done? Have I won or lost? And that's what trading should be about. If you've got too much risk on, then it's not going to be like that. You're going to be looking at your phone every 2 seconds and whatever else, your metrics, and that's not right. It's, you know, so. Okay, so hopefully that's enough. Zen, we've recorded it. It's a good little session, actually. A couple of things that I wanted to share with you. I wanted to keep it to about 40 minutes. I've done 50 odd minutes. I've got a nice little spreadsheet I want to show you, which I did at the beginning. So that's at the beginning of this session. Have a look at that. It's talking about how much you're worth in terms of how much you're earning per hour. So it helps you in terms of productivity. It's good to be productive in any industry, including this. You're running it as a business, so you want to understand that. Spending 8 hours a day, 10 hours a day, 12 hours a day staring at charts is not productive. You're not going to learn anything. You're not working on yourself. You're just over trading, and you're a mess. And not even the 1-800 I'm a mess helpline is going to help you there. Any final questions? I'm still bullish, looking for that bullish pump on gold. This, yeah, I'll show you this chart. This is a nice user-friendly chart. There we go. Yeah, I'm still long here, by the way. I've got a long on. I put another long on about 62, I think. Well, I put one on at 60 and 62. And I took one off for profit, so that's 25 pips. So I kept a little one on though. I did a little one and a big one. Took some money off the big one and leaving a little one to run. So yeah, we've come back to test this area. Previous structure. Let's put some fancy boxes on all the blocks, or whatever you want to call them. Supply demand zone. This was the area, wasn't it? 1862. I said 1862 was my area. I want it to break above that before I really do consider being bullish. You can see previous structure on the left here. You can see it here. Support now acting as resistance. When it knocks off there, dropped down, you know, and then it was brought back up at around 1810, I think you'll find, if we look at it on a 1 hour, which was a 764 strategy. Inverted head and shoulders, left shoulder, head, right shoulder, up. We're waiting for the next pump, hopefully with the US traders now. We've had this corrective pull back into this zone. Testing previous structure, maybe we'll go bosh, 1880. That's what we're looking for, 1880. Will it do it? Of course it'll do it. I'm trading it, I know I'm the markets. Come on. Non-believers. Infidels. No place for you here. Right, have a good day everyone. I'm off. Any questions before I go? Anything? Nothing? Watch the video again. A couple of good little nuggets of info, as always. 80% self-development. 20% trading. Sit in your hands for 8%. Do some work on yourself. Whatever works for you. Meditation, stand upside down on your head. You know, doing handstand push-ups. Bit of CrossFit, exercising. Whatever. Cheers guys, have fun. I'll keep you posted. Yeah, talk to you later. Bye.